In this video, we're going to talk about how we can use price action rules to help us navigate the market and identify high probability setups. We're looking at S&P 500 M&A futures, and today's session started with neutral bias. There is no big trending market in either direction, so what you have to take into consideration is that you're going to be using mainly short-term channels, short-term channel rule, until you have bigger pattern confirmed. Okay, so every single time you're not sure and there is no clear big structure established just yet, just follow the short-term channel. This is what I'm going to do. If a downtrend working lower, a small break pushed to a new extreme and the downtrend played out. So this is telling me, according to price action trend line rules, that the downtrend played out. I'm just going to wait what's going to happen, and I simply follow candlesticks as they're being printed on a chart, and this will tell me everything I need to know about the intentions of market participants. So right now, as a price action trader, I always want to have candles within a channel. There is never a price action move without some sort of reason, without a channel. So right now I'm going to use the market geometry. I'm going to connect the swings of these lows, and I have overshoot, and I'm going to redraw another short-term channel. Okay, so this way I'm going to be navigating the market in the best possible way, and I want to know where the market is heading. Downtrend played out with the break push to a new extreme, and this right here is the bigger pattern, so I expect new high. Okay, I expect new high for the trend line rule. We have a new high for entry long, second entry long. Now I cannot go long just yet. We're below EMA and we have a congestion. What I'm thinking about is some breakout, pullback, because most breakouts out of trend ranges will fail. So the breakout, pullback, and to test the new high. Okay, so this is what I'm expecting, because this uptrend is new high. Let's see what's going to happen. And the downtrend played out. Okay, we're breaking finally, and the most breakouts will fail even out of this small congestion. Fell breakout. You have a high low here, but it's below EMA. This is not good enough. It still looks stacked, so I need to be more careful. And this is interesting setup, because this is the lowest low of this correction. First entry short, pullback, second entry short failure. If there's going to be a break above this bullish bar, and a new high here, first entry long, pullback, second entry long. So this is actually a double high probability setup, which is stronger type of trade than you normally have when you have just only one high probability trade. So double high probability setup, you're going to combine a failed second entry short and a second entry long. You need new high, downtrend played out, and this is first decent high probability setup for the day. Double high probability setup, great signal bar, you need new high, uptrend played out, which means I'm going to pause looking to go long, and let's see what's going to happen. I'm going to redraw a brand new downtrend once again. I'm going to redraw the brand new downtrend. And at this point, this is where I'm starting to draw these key levels, because we've been going sideways for quite a while now. So I'm going to draw these key levels. You want to have key levels with a lot of confirmations, but at this point, I don't need to be perfect. I'm going to tweak these key levels as I get more information, but this is a trend range. You can definitely tell that this is a trend range, it's not a trend market, and you always want to look for these key levels. So let's see right now what's going to happen. Okay, I'm going to redraw short-term uptrend working higher like this. Market is trending higher. Now we are breaking the trend range. Can I be thinking about fading? I cannot. Okay, there's no setup anyway, but let's say there is great opportunity for me to sell fade breakout. It is too steep, and it's easy for me to draw wider channel like this. It looks too much like one seamless push up, one leg working higher, so I cannot be thinking about selling. The bullish momentum is too strong. In fact, I'm thinking about breakout, pullback, second entry long. Okay, this is the highest high of the correction, first entry long, uptrend is new high, so I want to see second entry long at the EMA, breakout, pullback. Can I get it? No, because I already have a break, a new high here, so I can't really go long here. Uptrend played out, so I'm going to pause looking to go long. I'm going to pause looking to go long. Market is going sideways, and we have some multiple tests here. This is tempting setup, because uptrend played out, we were in a trend range, and this price level is really strong. Rejections are really strong around this price level. Sellers, they're stepping in at this particular price level. You have a new low, so like a first entry show, second entry show, lower high, but I'm going to mark it mainly as multiple test. More advanced trader can actually consider selling here, the multiple test, because uptrend played out, strong key level, great signal bar. But if you're a beginner trader, you want to wait for the failed second entry long, or at least a lower high below the EMA, because the push below EMA is the confirmation that the market is about to reverse. I'm going to redraw a small downtrend. Once again, always look for these channels. You can see you only basically combine two main structures here. The big one, which is a trend range, and the smaller patterns, these short-term channels. And by doing this, you can predict what's going to happen, and this will keep you on the right side of the market. So right now, downtrend breaking low. I like drawing a wider channel because we are heading most likely all the way down to the bottom of the trend range. Move is too seamless, good. The market is correcting. I have a new low, first entry short, second entry short. I cannot take second entry short because the uptrend is still in play, as you can see. You also have to draw the mini short-term channels even when the bigger pattern is in play. Okay, this is the bigger pattern, the bigger downtrend, yes, but there's also short-term trend line rule, so I cannot go short just yet. So I'm thinking about lower high below EMA or some double trap, which you have a double trap now. Double trap will form when there is something wrong with the second entry short. For example, it's far from the EMA, it's congested, or short-term channel is in play. In this case, the short-term channel was in play, break, new high, they stopped early sellers, and now we have double trap. But the problem is, look at the signal bar. You have to use double bar entry. This is terrible tail at the bottom. You know, this is a great context for double trap, but unfortunately, there's no good signal bar for us to enter. But EMA keeps rejecting, uptrend played out to break new high, downtrend is new low, everything is aligning. So last chance is to get some lower high confirmation set up. Okay, you already have a new low, so this is not a lower high because we already broke the low you're counting from. The market keeps trending lower significantly even after the initial channel played out. Okay, and because I can see EMA rejecting every single time, this is a good information that the market is right now evolving into bigger downtrend, something like this. So the structure evolved into a little bit wider downtrend. New low first entry short, and I have another second entry short. Another second entry short, uptrend played out with the break, push to a new extreme. We have two key entry points, EMA and the trend line. The signal bar is fairly weak. It's a bearish doji, but the risk is so tiny. You can see only 1.75. Two key entry points, uptrend played out. You know, I took this trade and I liked this trade a lot because it's such a great context. Signal bar is fairly weak, but two key entry points, uptrend played out, small risk. It's worth taking this risk. Great second entry short. I'm going to redraw a brand new uptrend working higher. Now you can view this basically as a mini fell breakout out of the congestion, but there is inside bar off the trend line. If you have some better bar, you may consider, but on this chart I simply cannot justify entry here. I need some lower high below EMA, something like that. That never formed. We have quite significant correction, so I'm going to redraw the uptrend. The downtrend working lower, okay, but everything played out now. All these short-term channels played out. Downtrend probably needs new low, but we moved also quite far away from this, so you want a little bit more confirmation that the sellers are truly about to resume testing the new low. So let's see what's gonna happen. Okay, we are on the way down to test the new low for this downtrend working lower. So let's see what's gonna happen now. I'm thinking about short opportunity. Small break new low already. Nothing at the EMA, no second entry short. I can't take anything. And a downtrend play with the break. Push to a new extreme. So downtrend played out, so I'm gonna pause looking to go short because the main downtrend played out. Let's see what's gonna happen. Let's see what is the next structure. I'm gonna redraw uptrend working higher. We have overshoot, which can generate stronger pullback in the opposite direction or sometimes even reversal. And we completely slice through the EMA like it's not even there. Okay, so you're forgetting about new high for this channel. This can sometimes happen because overshoot can reverse the market entirely. In this case, you can see massive spike below EMA. We completely reversed all the way down here. And we have second entry short again. This was a little bit tricky structure when I was watching this live, because when I was watching this live, I actually drew the channel from the highest swing here and I had some small overshoot. So when I was watching this live, I didn't take it, but it's a second entry short, it's at the EMA, and if we're going to start a little bit lower, there is no overshoot. This is one of those few instances where really you need to trust your gut feeling, and it's a little bit subjective because I had the channel with small overshoot. It's borderline, it's close. I'm going to mark it. If you're playing this channel without overshoot, you can go short. If you're playing the channel with overshoot, you probably want to wait for the new high, first entry long, pull back, second entry long failure like this. Okay, this is what you're thinking about because this downtrend needs new low. So once again, we're following these channels. You actually have a full second entry long here, but problem is you don't have much room to scalp out. You're actually selling quite far down, so I don't think I can take this. Had this bar closed somewhere around here, you can definitely sell for a second entry long, but the way it closed all the way down here, you know it worked. We don't really like selling this far down, so Gotta be careful. The market keeps trending down and keeps trending down. So now I have to really explain, hold on. These short-term channels, they're not taking into consideration this entire structure. Okay? This entire structure is just not explained by these short-term channels because there are too many price swings and too many low highs and low lows. So at this point, I'm gonna look for some bigger channel, something like this. Okay, because you can tell that the structure evolved into stronger downtrend, bigger downtrend. So now it's appropriate for me to draw this bigger downtrend. You don't really have to draw this, but it can kind of solidify that there is bearish bias. And what I can also do, look for some shorter term one, medium one. Let's see what's gonna happen. Always respecting the corrections. Okay, second entry short below EMA would be okay, simply because we are inside a big downtrend, so the bias is still bearish. So we're thinking about selling. You have a second entry short here, but no way to get in. Inside bar, and didn't even trigger. You have to go short below bullish double inside bar, so you can't go short here. If you have some juicy bearish bar, maybe, but on my chart, I can't take this. We're correcting. You know, we have some lower high, actually, new first entry short, second entry short, another second entry short. But it's not really confirming much. Even this downtrend played out. You know, I don't think we can go short here. Nothing here. We have some small overshoot. And at this point, basically, the market is about to close here. So this is the overall structure for today. It was a decent trend day. We had a few good high probability setups. As you can see, we start with the trend range. So your goal is to locate the main key levels and mainly follow short-term trends. Eventually, we started with a brand new downtrend right here. And you can see it's not acting as a trend range at this point. The downtrend is too structured. It's too long. There is so much empty room. So you mainly switch and you adapt to this bearish structure. This double trap would have been great with better signal bar. And other than that, this entire area you have to be a little bit patient. And also here, you have a great second entry short here. But this one was way too big. And this was an inside bar with a bullish body at that. So great context. Decent setups. There would be even more trades if we had better signal bars. But this is how we navigate the structure using price action rules. Always follow the short-term trends at the very beginning. If the trend's going to evolve, market's going to provide enough information for you to adapt and draw a bigger channel. But I hope you had a good trading day. I'm going to wrap it up. And I'm going to talk to you next time. Good luck in your trading.